Benefits podcast with our host, Tom Quigley. Tom, how are you? And I'm excited about our topics today. How are you doing?
Oh, I'm doing well. I'm in Maine and it's 90 degrees here today.
Yeah, it was beautiful yesterday in good old Metro, Ohio, but today it's nasty out. So I'm jealous. Our topic today is, are you leaving tax savings on the table? So we're gonna focus on tax saving opportunities, uncover how businesses can leverage HRAs, HSAs, and Section 125 plans, and educate listeners on common tax mistakes. What are the most overlooked tax advantages tied to employee health plans?
Biggest one they miss is the Section 105, which enables them to purchase health insurance through some vehicles such as a medical expense reimbursement plan, health reimbursement arrangement, individual coverage, health reimbursement arrangements. There's all kinds. That's the biggest one. The second biggest one is a lot of people don't have these flex plans in, and daycare costs are ridiculous, but you can put up to $5,000 in for daycare. Help your employees out.
And that's interesting. I want to follow up on that. So tell us about that daycare cost, how that can help.
Part of the Section flexible spending account is not only you can put money away for certain things for anticipated medical expenses and daycare expenses. So you can literally put up to $5,000 a year towards daycare and pay for part of your daycare costs tax-free.
And that's going to make employees really happy, right?
Yeah, daycare costs are crazy how high they are.
It's almost like you're sending them to boarding school, or worst case, or sending them to this private school with the cost for daycare, for sure. Depending on what
some people, I wonder, why are you working? If you do the math, it doesn't make sense.
I know someone like that, but that's between you and I. Next question. How do HRAs, health reimbursement arrangements, help employers reduce taxable income?
Same with the medical expense plan. What you're doing is the employer can pay for items that they don't have to buy insurance for, and provide that to the employees with tax-free dollars.
And that just cracks me up. If it's that simple, why don't more people know about these things when they're trying to save?
Because the owners aren't getting involved. The owners are just screwing around, not doing anything. And it's crazy what they're allowing their HR and their office managers to do on their benefits. And I don't know what the CPAs are doing either. They should be all over all of it.
What's the difference between an HRA and an HSA in terms of tax benefits?
An HSA is for the employee, or the employer can put X amount of dollars towards your health savings account that you can use to spend on eligible medical and dental and vision expenses. And what they're doing is an HSA, the employee owns the money. So if they leave, they take it with. Whereas an HRA, you're agreeing to pay a certain portion if they use it. If they don't use it, the owner keeps the money, not the employee.
That's quite an interesting process. And what do you recommend?
Owners should do HRAs. Employees who get it should set up their own HSAs and fund them because it's pre-tax dollars.
And basically, you at ClaimLinx helps definitely in that process, don't you?
We do it all from A to Z for them.
Because you're in it to win it. You want to save the money so that everyone wins.
Performance-based, fee-based. The agents are not. They're commission-based.
So how can businesses structure premiums and reimbursements to be tax deductible?
They need a document that we provide, but almost any vendor doing HRAs, HSAs, FSAs have the documents needed to do it.
Are there limits or rules businesses need to follow to ensure tax compliance?
Yeah, the IRS puts out a publication called 502 and it outlines all the eligible expenses for HSAs, HRAs, MERPs, everything.
Okay. And then that process will help you to make sure that you're doing the right thing and following the rules.
That's what they say.
How does Section 125 cafeteria plan work and who qualifies?
Anybody who does, if it's an S or an LLC, the owners can't participate if they have more than 2% ownership. But all employees can take advantage of it. Or if they're a C corporation, anyone can.
Okay. Can owners or partners participate in tax-free medical reimbursement plans?
Same scenario as the same rules apply.
How many owners don't know about that and partners?
A lot.
It's crazy. What documentation or systems should a business have in place to support pre-tax reimbursements?
They need a document that outlines what they're agreeing to do for the employees. So they need to have it available if the employees need it to look at it, or they also need to have it if they ever get audited from the IRS or the Department of Labor.
How does ClaimLinx help clients implement and manage these tax saving strategies?
We do a Zoom call like we're doing, and we show them, hey, this is what you're currently doing. Wouldn't it make sense to do it this way? It equates to X, Y, Z of savings. And I haven't met anyone who doesn't like to save and accrue benefits. It's getting them to realize that what we're offering is totally different than what they've been shown.
What are some real world examples where businesses save thousands through proper tax planning and their benefits?
Oh, I have companies that go from paying a couple $1,000,000 down to $500,000. Or a small business equates go from 100,000 down to 30,000 just by simply restructuring how they pay their health insurance. And if you think about the balance sheet, you're shifting the liability over to the asset column. It's insane how much, money, if you shift 100,000 into the asset column and your profit margin's 5%, I'm offering you a $2 million sale.
Yeah.
How many dollar sales do you make in a year? I don't know.
But what's crazy, Tom, is that's just part of what you do at ClaimLinx, meaning this is just the tax part of it.
Then you take advantage. We take advantage of all the grants. I had lunch today with somebody. They were paying 20 foot. They're going to go from 2,400 a month, small individual contractor. His wife retired. So now they're going to pay 280 for themselves and their one son.
My gosh. That's crazy. And how it's just
not. I got him a card and his whole deductible will be covered by the manufacturer drug fees on his card. He only pays $10 for it.
That's the creative side of, you have to be really creative when it comes to healthcare. And
I compare it to a football game. If your game plan is we're going to run the ball up the middle all game, and you go 3 and out, punt every time. If you want to win the game, you better change your philosophy pretty quick. Or this was going to be an L this week. I'm telling people, you're doing that on your health insurance. You better hurry up because you're missing the boat. For both yourselves and your employees, you're asking to pay for health insurance through you. You're not winning the game. You're losing the game, guys. And you don't get the #1 draft pick in this game.
Yeah. Are there any 2025 updates to tax law or compliance that employers should be aware of now?
If anything, much more laxed with Trump over Biden.
That's true. I'm sure. So what happened to all those IRS agents?
Not my problem.
How can a business start saving once these strategies are implemented with ClaimLinx?
How long?
How can a business start saving once these strategies are implemented? How long? Yes, sir. How soon? Sorry about that.
They want to start July 1st. They could start saving.
Yeah. All right. The best place to go is claimlinx.com and schedule a call with Tom DeGay because you're waiting on the line for them.
I have a lot of people who want an hour of my time. Because their friends have told them, if you don't listen to the guy, you're insane.
All right. That was the special simulcast of the Neil Haley Show and the Cutting Edge Benefits Podcast, guys.